Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in.
Good morning on a Tuesday, and we will start with US stocks, which gained and made new records as investors grew confident that trade deals will be struck before the July 9th deadline. Both the S&P 500 and the Nasdaq 100 rose 0.6%. There's talk that more than a dozen deals with other nations are likely to be signed off on, and that's keeping spirits up ahead of earnings season that begins 2 weeks from now. Hedge funds, in the meantime, were net buyers for the 8th straight week. Coming to related markets, the VIX rose 2.5%. The dollar index and the 10-year treasury yield dropped. Gold prices jumped 0.9% and had their best single-day gain in 2 weeks, while oil prices fell 0.2% to 67.61 after 3 days of advances. At home, the rupee could not build on its rally from Friday and fell to an intraday low of 85.77, which is where it settled. The currency ended 0.2% down in June, its second straight monthly drop. Meanwhile, data showed that India's industrial production rose 1.2% in May, which was the slowest pace of growth in 9 months. Coming to stocks, the Nifty ended 121 points down at 25,517. The India VIX rose 3.2% and closed at 12.8. Mid-caps and small caps gained, however, as investors went on risk-on mode. Nearly 63% of the NSE 500 members rose, even as the index ended flat. 7 of the 12 NSE sectors fell, led by private banks and realty, which dropped 0.9% and 0.7% respectively. PSU banks were the best performers as the sector rose 2.7%. The best and worst performers on the Nifty were Trent, which gained 3.3%, and Tata Consumer, which dropped 2.3%. Technically speaking, yesterday's decline confirmed a bearish engulfing pattern, which was also part of a larger evening star, which means that resistance at yesterday's high of 25,670 can become a critical short-term hurdle. Support lies in the 25,250 to 25,400 area. Meanwhile, provisional data showed that foreigners withdrew 832 crores yesterday, with June ending with an inflow of nearly 7,500 crores. This completes a 4-month streak of foreign inflows in the cash segment. On to derivatives now, and the Nifty's put-call ratio went to 0.81 from 1.25. While the bank Nifties went from 1.13 to 1.08. Nifty puts were unwound, a significant number of calls were added, and at the money implied volatility dropped 11 basis points at the close, which meant that on a net basis, market participants turned bearish. For options set to expire on 3rd July, resistance lies in the 25,600 to 700 zone, while support lies at 25,500, followed by 25,200. Elsewhere, volatility traders paid more for 1% out of the money calls compared with similar distance puts, which means they were optimistic. Speaking net index options activity, foreigners and proprietary traders were bearish, while retail investors were bullish. Meanwhile, foreigners' net short positioning in index futures rose to 38,000 contracts from 33,500 contracts previously. Looking forward to the day, the GIFT Nifty opened 21 points higher and was up 52 points at 6:45 a.m. Asian markets were a mixed bag, while US index futures were also slightly up. Coming to stocks, Star Health was at horizontal support, while Deepak Nitrite, IRB Infrastructure, and Medanta were at horizontal resistance. Balrampur Chini, Naukri, and ONGC were at trendline support, while Aurobindo Pharma, Craftsman, and Dabur were at trendline resistance. Talking market breadth, 80%, 85%, and 62% of stocks in the NSE 500 were above their 50, 100, and 200-day moving averages. Manufacturing PMI is due from India, while ISM manufacturing data is slated to release from the US later today. That wraps up the day's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you, and we will see you tomorrow at the same hour. Have a good day.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.